Hey, it's Clay, and this will be a video chart on ticker symbol JAGX. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think it's a good job of telling the quote-unquote story of the price. And in this situation, makes summarizing the price action pretty straightforward. So if you say, Clay, look, summarize the price action today for me quickly, I would say pump and dump on thin ice. Now, I don't know anything about the company, so I'm not saying that directed at them. I'm just making that statement based solely on how the price acted today. And my definition of a pump and dump is that a price makes a really nice move, and then within a relatively short amount of time, the price goes right back to where it started, or in some cases lower. So where did all this actually start? Well, to me, it started when it broke out of this previous breakout point, or this, I should say, this former area of resistance right down here at basically 18 cents. So you look back here through the history of the chart, and you can see 18 has just been a very stubborn area where the price, there's been a lot of history with it, but for the most part, the price just hasn't been able to get above it. So that is, again, where the quote-unquote breakout happened and where the move started. So move started right here, and as the first part of the definition says, makes a really nice move. Well, if it started there and went all the way up there, I'm assuming we can all agree, yeah, that was a really nice move. Second part, within a short amount of time. Well, considering this all happened in the same day, once again, I'm assuming we can all agree that this did indeed happen within a relatively short amount of time. The price goes back to where it started, or in some cases lower. Now, this is where the thin ice point comes into play, because to be fair to the bulls, something like this could happen. The price could come down here to 18, walk along that thin ice, and then start to work its way back upwards. And again, in the spirit of being fair, well, then technically speaking, you'd have a set of lows right there. You'd have that low right there. You picture these as stair steps, and the bulls would be showing some signs of upward progress. Whereas if the price comes down here, walks along the thin ice point of 18, and then breaks to the downside and keeps on sinking, well, at that point in time, you would literally have the price right back to that area of the chart where it just was. And not to insult your intelligence, but price movements that are going back to where they were, not exactly a sign of true strength. So if you can connect those dots, hopefully you see that 18 cents is actually very important tomorrow. So we'll see if the bulls can hold above it or not. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.